Welcome to Ellevate Louisiana's Engage Videocast. Ellevate Louisiana was founded in 2020 to empower women leaders throughout Louisiana by connecting and educating them on the challenges impacting our state with data-driven, nonpartisan solutions to make a better future for Louisiana. Hello, I'm your host, Julie Stokes. Today's program will focus on the Louisiana tax reform and the 2021 fiscal session. We're excited to have as our special guest today, Senator Bret Allain, who will talk to us about those subjects. Senator Bret Allain was elected to the Louisiana State Senate in 2011 from District 21. That includes Iberia, Lafourche, St. Mary, and Terrebonne parishes. It's pretty big. He currently serving his third and final term in the Louisiana State Senate. In the Senator, Bret serves as chairman of the Senate Revenue and Fiscal Affairs Committee. He also has been appointed to serve on Senate and Governmental Affairs, Natural Resources, and the Agricultural Committees, as well as Joint Budget, Joint Legislative Committee on Capital Outlay, and the State Bond Commission. A busy man. We thank you for having the time to come sit with us today. Welcome, Senator Allain. Well, I was just going to, say, I know that you're carrying a pretty comprehensive tax reform package, and just like, what are the components of that?
Okay. So first of all, let me start out by saying I am supporting the ongoing effort to centralize state sales tax, but that's really the Speaker's bill, and he's the one that created the task force, but I'm very supportive of it doing it. There's a lot of benefits for getting that done. So, but that's more the Speaker and Beaulieu and Milligan on our side that are pushing that effort forward. So what we're trying to do is, let me give you just a little bit of history. A year ago when we were in DC, we made time to go meet with the Tax Foundation, the Council on State Taxation, Multi-State Tax Commission, the tax administrators. And the same question I had to all of them was, why are you ranking us so poorly? They admitted that tax burden on businesses and people in the state of Louisiana is somewhat in the middle of the pack. So we should be ranked 25th, 26th, 27th at the worst. But because of some of the antiquated tax policies that we have, that they score us poorly. And right now we're up to 42. We were 44th last year, which is not where we need to be. Nope. So first of all, the first initiative we had, and I have it top on the list, is to lower the individual and corporate income tax rates. And we're gonna do that by eliminating the deduction on federal income taxes. That roller coaster we've been riding for a long time. We really don't have control over that segment of our finances, and it's either gaining or losing us money, depending who's president. Right. Now we know that we're in the face of having most probably a tax increase on the federal level coming within the next couple of years. So now is the time to try to get rid of it, and dollar for dollar try as well as we can within the brackets to buy down the rate, if you will. It's not going to be a tax increase or a tax lowering. We're going to try to keep it revenue neutral as much as possible to get everybody on board. But it's a change in tax policy that I think will vastly improve our rankings. Why is that important? Because a lot of people look at the tax foundation and cost when they're making investments in the state. And we have to improve, and we should improve our ratings, because that will attract, I think, additional capital here. We're still playing with the numbers. You want to add something, Julie?
Yeah, I was just going to say that, in talking to all of those groups, it would really benefit us to increase our rankings. And, one of the things that I and a few others had worked on was a flat income tax in response to trying to get rid of the personal or the federal income tax deduction. But the problem there, and I've heard you speak before, is that it's very difficult to be what I call bracket neutral. you can pass something that's revenue neutral, and it generally, the tax burden stays the same, but there are swings where our tax brackets break. So from what I understand, what you guys are trying to find is the spot at which you can lower all three of the rates and keep every bracket sort of neutral. So you're looking at revenue, what I call revenue neutrality and bracket neutrality, correct?
Correct. So we're going to try, and I think it'll get us the broadest base of support, because to eliminate the FIT deduction will require a constitutional amendment.
Right.
And we're going to replace it by buying down the top rates. You know, we should be able to get the top rate down a couple of points. I would prefer to be a flat tax, but I just can't make revenue neutrality work. So listen, one step at a time. If in future years we want to look at the flat rate, I would be supportive of that. But right now we need to get what we can politically and move on. So that's the first big initiative that we have.
So, Senator,
sure.
I wanted to park on that just for another moment. But you know, when you look at that back before the Trump tax cuts. So the Trump tax cuts caused a big revenue surge in Louisiana. And in a lot of ways, it saved the day, because even though we had tried to, in previous sessions, stop that from happening by getting rid of the federal income tax deduction, it happened when that penny of taxation was about to go away. When we did that analysis, we found that the effective rate was very flat across all brackets at about 3.68%. The most important thing to get, though, is that table from Greg Albrecht, which has been on a previous videocast for us. It shows every bracket, and it's way beyond a bracket. It's like $10,000 increments. It's tiny little increments. Has there been any activity to get that from him yet? And when do we think we'd be able to see that?
I've been working with Greg for 2 months now. And in fact, I was in a meeting with him yesterday at 11 o'clock, and we have redone that spreadsheet. It's an Excel spreadsheet. We've redone that spreadsheet probably 7 or 8 times. Also getting input from the Department of Revenue, comparing the two. But Greg really has a good handle on personal income tax. Now, for the corporate income tax, there are less filers, there's different information. We're probably going to have to more depend on Department of Revenue, what redacted information that they'll give us. They're reluctant. I mean, they can't identify individual taxpayers. That would be against the law. But so we're working with a mix of information. But yes, I think we're there. Now remember, even when I lower even when we lower the rate in the lower brackets, everybody pays that amount in the lower bracket. The effective rate, even if the upper rate ends up being 4%, the effective rate is going to be closer to 3.8, because you're going to pay less on the first 50,000, less on the next 75, and then the upper rate just covers the upper income, if you will. You would know that better. I had to be educated on that, so.
Well, and I would honestly say that the 3.68 also involved some trimming of excess itemized deductions. The way that it was structured, it's kind of a long iteration, right? But prior to a big tax reform that was done in 2003, the Stelly plan, people were able to deduct 57.5% of their excess itemized deductions. And then in the legislature, we called it repealing the Stelly plan, but what we really did, it was a tax swap from sales to income tax, and we kept the sales tax deductions, but we got rid of the income tax increases. And when we did that, we went all the way to deducting 100% of your excess itemized deductions. Do you see any activity being done in that arena, or just strictly being federal income tax?
Our proposal is gonna be the elimination of excess itemized, except for medical. If you have a large medical, it buys down the rate even further. And look, it only affects, I think there's only 12%, because of the Trump tax cuts, there's only 12% of the people that are still itemizing. So that number has shrunk to a third of what it used to be. And there's not as much money there. Look, if we get into the debate and people want to put that back to excess itemized, it just means the upper bracket's going to have to go up to make it revenue neutral. But we're going to start out with the lower rate, eliminating the FIT deduction, and also eliminating the excess itemized. And look, it's not as much money as everybody thinks. So we're going to start with it there, and if we have to jettison that, then the upper rate will have to go up to compensate.
Yeah, you get pushed back.
Our idea is trying to get the upper rate and the middle rate as low as we possibly can.
Yeah, good. And I mean, just to, because I want to go ahead and switch over to some of the other tax types that I know you're bringing bills for, but you know, one thing that I want people on the call and people listening to understand is that just like Louisianans' taxes went up because of the Bush federal tax cuts, if we don't do this, if we don't get rid of the federal excess or the federal income tax deduction, we'll be facing a situation where if the new Biden administration increases tax like we believe that's in his platform, basically, that we could be looking at a fiscal crisis to the tune of $485 million for state income tax going down. So I think it's a solid thought, and that it should probably be part of what happens. And I'm glad that you're looking at complete bracket neutrality. And whatever you have to do to get it passed, because being linked to another system, the federal system, is terrible policy, and that's why we're only one of 2 states that do it. Yeah. Is there anything else you want to say on that?
Yeah, well, and listen, revenue neutrality is something hard to chase down, but we're going to do our best to try to get there. It's not going to be perfect. I think you will still end up with a fiscal note, but a minor one at the end of the day. But the alternative of not repealing the FIT deduction would be a lot more disastrous. We really need to get off of this roller coaster. Over the last 20 years, almost every state in the nation has done away with it to take back control over their own finances. And we don't want that instability. And besides, the tax foundation charged us with a higher rate in our rankings, but gave us 0 credit for the FIT deduction. Yep. So that is part of our poor rankings. Yep. Between that and inventory tax, which I'll talk about in a minute. Yeah. Reducing, and listen, let me make this comment now. It was very obvious between tax foundation and cost. Their main goals are simplicity and predictability for the taxpayer. Not wanting to put any CPAs out of business, but if we could make it a lot simpler, I think people would have more confidence, and it would definitely increase our score. So the next item that we have is reducing and simplifying corporate franchise tax. Definitely, I want to make, if nothing else, make that bottom tier permanent, to where we don't charge on the first 300,000. We're even running the numbers on not charging franchise on the first 500,000 of capital in the state. That will relieve about 80% of the filers out there. Still not going to help the big boys, but it'll relieve a lot of the filers, and everybody should get that break. We're working on some other proposals to try and, if not buy down, eliminate franchise altogether. It's a horrible disincentive when you tell people that we're going to charge you on the capital that you invest in the state of Louisiana. Between that and charging on inventory are 2 of the worst disincentives for attracting people here. And the reality is, what we're doing is try to make us look better in tax policy to attract more investment in the state.
Right. Now, you had mentioned to me, or in another meeting that I was part of, that you were perhaps going to combine that franchise tax reform with some work on the industrial tax exemption program, because they're both property tax in essence driven.
Well, actually, I'm going to get to that. We're actually going to try to use the ITEP, industrial tax exemption, to eliminate or phase out, if you will, inventory tax. So that's the next subject that I'll get into. Okay. Also, one of the worst taxes that we have, the inventory tax has really scores us very poorly. Since 1991, since the 30s, the local governments have charged businesses for inventory they have for sale or inventory that they have for further processing, any inventory that they have. And the debate has raged from the 30s until 1991, when at that time the legislature said, we'll just give it back. The state will write a check back to the businesses or give them credit on their taxes for 100% of it. Well, that was fine. In 1991, the burden to the state was $41 million. That quickly grew over the years, and I think it was in 16 or 17, that burden had grown to $450 million burden to the state. It's the sheer weight of it on the budget. Something had to be done. There were a couple of bills to limit who got the credits, and Rick Ward's bill to make people choose between getting the credit and getting ITEP has cut that number down, but it's still a cost of $300 million to the state. So one of the proposals, and on Monday, we met with the locals and are trying to work with them. But since Governor Edwards has been in office, they have only been able to capture 80% of ITEP, to where if there's a $100 million investment in the state, they could only get forgiven 80% of the property tax. They still had to pay to the locals 20%. That money has been flowing to the parishes, and a lot of them are very interested in keeping that money coming. Still at 80%, it's a very generous incentive program. And let's be truthful, we've had to have that very generous incentive program to make for some of the other deficiencies we've had in our tax policy to be able to attract businesses here. So it's been a balancing act. So what we propose to the locals is, it's in the Constitution, so we'd have to do a constitutional amendment to permanently limit the ITEP to 80%, and along with some other backfills, the local governments would give up charging or phasing out, if you will, inventory tax. And I'm hoping within the next couple of years. Look, the locals haven't completely agreed to it, but at least we're talking, and they hadn't told me hell no yet. So there's that. So those are two of the largest deductions that we don't get credit for. The FIT deduction and the inventory tax credit are two things that we don't get credit for. And I really believe it would move our rankings up tremendously by just doing those two things.
That's really encouraging. So you haven't been told hell no yet. Have you had positive feedback from local government on that?
I have to a certain extent, and I'm not gonna, I mean, we've had the sheriffs and Louisiana Municipal Association, Police Jury Association, and the assessors all in the room. We're gonna meet separately with the School Board Association. But it's interesting, the trade that's going on and what we're going to need to add to it. Like I said, there's a $300 million expense that we have now. They would like some type of additional revenue sharing on the sales tax to be done with them to kind of make up the difference. You know, and I'm convincing them that you have to give me at least 75% credit for ITEP, because that is additional dollars that each one of these parishes are getting. And a lot of parishes like Assumption and Cameron and Calcasieu and St. Charles, it's a huge number. A lot of big plants have been built there, and it's a huge number. So it has an interest to a lot of people.
Yeah, so you alluded earlier, and I know that it's not your legislation, but you alluded earlier to centralized sales tax collection. And, you know, I know that it's another issue where we're trying to negotiate between the state and the local governments at this point. Do you have any updates on that? Like, you hear anything about what's going on that? Or you had mentioned that how it was going to be set up, that this year we're trying to do part of that. Like, what's going on there?
Uh, it's not my legislation, but I see broad support amongst legislators. You know, I'm on each one of this, and let me say this now, on each one of these bills, Stuart Bishop and I have been working very closely. I'm the chairman of Revenue and Fiscal Affairs. He's the chairman of Ways and Means, which deals with the tax policy, and we've been working very closely together to try to do this. You know, he's talked to a lot of his people. I'm scheduled to present to the Republican delegation here shortly. I have not, except for a few legislators out of Jefferson Parish, I haven't heard any real pushback. And I know there's continuing discussions with the sheriff in Jefferson and some other people, but hopefully we can work some things out. Remember, this constitutional amendment that we're purporting only is an enabling legislation. You're still going to have to work out the details in statute of how it's going to be administered. So that's maybe the disconnect that you're talking about.
Yeah. So what I'm understanding, and correct me if I'm wrong, is that the legislation this year will be a constitutional amendment to bring to the voters, because the voters have to approve centralizing the sales tax collection, because right now the ability of the locals to do that on their own is in the Constitution. Correct. And then in the coming sessions, there would be legislation to address how to do that. And is that correct?
Yes, and the framework has already been worked out. You know, a central board that would collect. There's some debate about how many positions the state gets, how many positions the local gets, the audit function, where does it lie? I mean, but they're not huge details.
Right.
So I'm very hopeful that whole scenario works out very well.
Yeah, that's exciting. So I'm going to go over to another issue that you've talked about, and that is mobile workforce. Because right now, the way the state of Louisiana is structured is that if you work for one day, if you're from another state and you work for one day in Louisiana, that you have a liability for Louisiana income tax. And so tell us a little bit about what other.
That's correct. Well, that's part of it. I'll go back to last year. A lot of what I considered the low-hanging fruit were acts by cost or council on state taxation. And we took the whole laundry list of what cost wanted, and we were able to pass about 3/4 of it last year. There are two measures that are still sitting out there. When I first talked to Doug Lindstrom with cost last year, we were rated a D-. And so far with the legislation that we passed, we've gotten it up to a C. And he tells me there are 2 issues left that are important to cost. And we could possibly become rated a B by them. They do the letter grade thing. And one of them is the mobile workforce employees. There are similar proposals from multi-state tax commission and by cost, and the multi-state tax commission says somebody can work here for 20 days without having to do the reporting and everything. And look, the knife cuts both ways. People from here don't have to report in other states either if we have the agreement. So they're 20 days, multi-state tax commission. Cost is 30 days, somewhere in between the two. I'm probably going to first propose the 30-day legislation to move forward, and we'll negotiate that from there. Maybe a little bit of pushback from Department of Revenue on that one. The other issue that cost raises is to conform the state partnership audit provisions with the new federal partnership audit provisions. And that's just aligning the two for simplicity. I don't hear anybody arguing with that one at all. So if I can get those two passed, then I think we could solidly be a B in the rankings by cost.
It's exciting. So I saw that you were possibly looking at another proposal to modernize severance tax.
Yes. So last year we created a task force, a study group to look at modernizing severance tax in the oil and gas industry. I agree with most people. 12.5%, some of the highest severance tax charged in the United States. But that is for vertical, straight down hole, vertical oil wells and vertical gas wells too. As you know, Julie, there's been an exemption for horizontal fracking almost since its inception when it was new technology and we wanted to encourage the new technology. Well, hell, now 80% of gas is produced in the state of Louisiana by horizontal wells, which are exempt from any severance at all. And our severance and our dependence of the budget on severance has gone down, way down. And I told industry, so we had an economist at LSU run a study of how to equalize that and get the severance down. And look, severance is a huge disincentive to drilling all wells in South Louisiana. The chalk in the middle of the state is still active with the vertical, with the horizontal fracking, but they're really drilling nowhere else in the state. So we asked industry, I don't want to fight industry, not in this year, trying to get a proposal that they don't agree with. So I asked them to come up with a plan. And I know they're working on it. I don't know how much progress they've made right now. You know, gas is also a big feedstock for a lot of these chemical plants. So, you know, there's more than just the oil and gas industry. There's the end users who are weighing in. So we're kind of gathering all that up, and hopefully they have a proposal that we can live with in the near future.
That sounds good. I think we'll just conclude today, like, since you're the chairman of Senate Rev and Fisc, I mean, what do you see on the horizon that might not be one of your bills coming up this year that'll come before your committee that you think will be major legislation that there'll be a lot of talk about?
Well, very, very little has been actually dropped in the hopper, if you will, bills that have actually been filed and are for public view. But I think I'm going to join with Representative Bishop or Chairman Bishop on doing some more reform to capital outlay process. There's also some reforms being talked about some of the tax credits out there. You know, some of these tax credits are renewable. I'll quote John Ilario, and I think Stuart and I agree that every credit, if not every bill, should be not only capped but sunsetted, to where we have an opportunity as a legislature to make sure it's still performing at a high enough level to where the cost and the return to the state are somewhat equal. So, but that's Stuart Bishop's working on those bills right now, and I'll probably co-author them with him. I'm more taking the lead on the five issues that I just talked to you about, and he's taking on the capital outlay reform. So look forward for that.
Yeah, and we'll be having him on the same show in the same roundtable format in just a couple of weeks. Thank you so much for joining us today.
My pleasure.
Thank you. That's about all the time we have for today in our podcast, Videocast portion. And I would like to just thank you, Senator Allain. I know how busy it is in these weeks leading up to session, and I know how it is to be in all those negotiations, you know, and while it's fun, really, I know it is, it's also a lot of work. So we appreciate your hard work. Over the coming weeks, we'll host additional roundtable discussions with some of our state legislators. The next one will be on March 10th with Representative Z. Zarang, who's the chairman of Appropriations, on Louisiana's budget and the 2021 fiscal session. Other scheduled roundtables can be found on our website at www.ellevatela.org. That's Ellevate with 2 L's, E-L-L-E. Finally, we will host our Legislative Leadership Conference on March 24th with Senate President Paige Cortez, Speaker of the House Clay Schexnayder, and Governor John Bell Edwards. They'll update us on what they anticipate happening in the coming session. We will also be hosting a Day at the Legislature on April 27th, where we will meet with legislators, attend committee meetings, and get an up-close look at working at the Louisiana State Capitol. And finally, don't forget to like Ellevate Louisiana on all of your social media platforms and share this video cast on your page if you found it interesting. I'm your host, Julie Stokes, and we'll see you next time.